Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets behind those dense financial reports. And today it looks like America's Car-Mart might have a few of their own secrets to confess, or at least some very important paperwork to sort out. So what exactly is going on with America's Car-Mart? Well, it seems like they've tripped up on their reporting deadlines with the Nasdaq Stock Exchange. This isn't just a minor oopsie, it's a situation that could affect how their stock is traded. The company known for selling cars, especially to those who might have a harder time getting financing, has received a notice from Nasdaq. The reason for this notice is pretty straightforward. They haven't filed their annual report on time. This report, the annual report for the fiscal year ending April 30th, 2025, is like the big annual checkup for any public company. It's supposed to give everyone, investors, regulators, and the public, a full picture of the company's financial health and operations. And America's Car-Mart is late with it. Now, why the delay? The company mentions they needed to include some important disclosures about loan modifications. Specifically, they're talking about accounting rules that require them to be transparent about how they handle loans when borrowers are having trouble paying them back. This is a pretty big deal for a car dealership, especially one that targets a segment of the market that might be more vulnerable to economic downturns. They had initially expected to file this report with an extension, but it seems they needed even more time. They even put out a press release on July 30th saying they couldn't meet that extended deadline either. This sounds like the situation is a bit more complicated than a simple filing hiccup. So what are the immediate consequences? The good news, if you can call it that, is that this notice from Nasdaq isn't expected to immediately affect the trading of their common stock. Their shares are still listed and people can still buy and sell them. However, Nasdaq has given them a deadline to submit a plan to get back into compliance. They have 60 days from July 31st, which means by September 29th, to propose how they'll fix this. Nasdaq might then give them up to 180 days from the original due date, so until January 26th of next year, to actually file the report. That's quite a bit of time. But it also shows how serious Nasdaq is about getting these reports filed. The company states that they intend to file the annual report as soon as they possibly can once they complete these necessary disclosures. They can't promise a specific date, which isn't exactly reassuring, but they are acknowledging the problem and the need to sort it out. This filing also includes a standard forward-looking statement section. This is basically legal jargon to say, hey, we're talking about the future here and things might change, so don't sue us if our predictions don't come true. They mention risks like the time and effort needed to complete the disclosure, the auditor's review process, and their ability to meet Nasdaq's listing standards. These are all very real concerns when a company is this late with its filings. The report also lists the exhibits. The most important one here is Exhibit 99.1, which is the press release announcing this whole situation. And naturally, there's the required signature block with Jonathan Collins, the Chief Financial Officer, signing off on it. So let's break down what this really means. For a company like America's Car-Mart, transparency is key. They operate in a segment of the market where trust and reliability are super important. When a company is late with its financials, especially for something as crucial as an annual report, where they have discovered material weaknesses and need to disclose loan modification details, it raises questions. We don't have the actual financial tables in this specific filing to deep dive into numbers like revenue or profit, but the context of why they are delayed is significant. The need to disclose information on loan modifications for borrowers facing financial difficulty suggests that the company might be seeing an increase in customers struggling to make payments. This could be due to broader economic factors affecting their customer base, or perhaps specific issues with their underwriting or collection practices. We don't have the actual financials affecting their customer base. Or perhaps specific issues with their underwriting or collection practices. If we were looking at the financial tables, we would be checking for things like the allowance for loan losses to see if it has increased significantly, indicating a more pessimistic outlook on loan repayments. We'd also want to see how their net charge-offs compare to their outstanding loans. A rising trend in charge-offs, meaning loans they simply can't recover, would be a major red flag. The fact that they identified material weaknesses in their internal controls is another serious concern. This means that there are significant deficiencies in their financial reporting processes that could lead to errors or fraud. For a company that relies on financing its customers, strong internal controls over loan origination, servicing, and risk assessment are absolutely critical to their business model and long-term survival. The Nasdaq notice is a consequence, but the root cause seems to be the difficulty in preparing accurate and compliant financial statements related to their loan portfolio. This delay and the underlying issues could impact investor confidence, making it harder for the company to raise capital or potentially even affecting their borrowing costs. Competitors who are more transparent and have their filings in order might gain an advantage. Now, looking at this situation more broadly, America's Car-Mart is in a tough business. They serve customers who often have limited options. This means they have to be exceptionally good at managing risk and supporting their customers through difficult times. The challenges they're facing with this report suggest they might be struggling with exactly that. It's a delicate balance between providing essential services and managing the inherent risks of extending credit to a population that may experience economic volatility. The key risks here are obvious. Continued delays could lead to delisting from Nasdaq, which would make their stock much harder to trade. More importantly, these accounting issues and potential weaknesses in their loan portfolio could signal deeper problems within the business that might not be immediately apparent without the full financial picture. An opportunity, however, lies in how they navigate this. If they can accurately identify and address these issues, improve their internal controls, and provide clear, honest disclosures, they could rebuild trust and emerge stronger. In conclusion, America's Car-Mart is facing a significant reporting challenge that points to potential underlying issues in how they manage their loan portfolio and internal financial processes. While their stock is still trading, the clock is ticking to get back in line with Nasdaq's rules. Investors will be watching closely to see if they can resolve these complexities quickly and transparently. What's your take on America's Car-Mart's situation? Do you think these reporting delays signal deeper problems, or is it just a hiccup they can overcome? Let us know your thoughts in the comments below. If you found this breakdown helpful, be sure to hit that like button and subscribe for more regular corporate insights. And don't forget to join our Discord community for more discussions and early access analysis. Thanks for watching, and we'll see you on the next one.